Good morning, everyone. Welcome to the Stock Market Morning Prep video for Tuesday, June 9th. Well, we get a little bit of a sell-off on Monday where I put a weekend edition video out, and I was just so surprised that the markets didn't sell off as it should. And again, it's just this massive manipulation going on in the marketplace. And believe it or not, guys, it is so true, and it's definitely happening every minute of the trading day. I mean, you could just see it. And yesterday, on Friday, when we had markets that didn't really sell off, it was just incredible to see the markets continue to hold up. Big money holding this market up as much as it possibly can before they can get that last rally and sell into. And sure enough, the markets let loose on Monday and sold off. Started early in the pre-market and just kind of rolled into the contagion. Of course, we had some Greece headlines again that now Greece is back in the picture. We all know Greece can't pay their debt, so they just keep kicking the can down the road, pushing for new dates and new bailouts. But eventually, the headwind's going to come, and they're going to say that we can't pay, and they're going to have to roll their debt into another package. So moving forward, what do we do from here, and where do we go? Well, we do have a little bit of weakness in the markets, which I anticipated. But you know what happens? You could see the algorithms really mess up the trade. A lot of the trades, because of the fact is what happens is when you have selling coming in, then the algos start probing for stops. They push the market down pretty much right away, and then you figure you get a good move lower for, let's say, a half hour. Really no pullback or no retracement. Bases and just kind of rolls back over again, or kind of stays in that range pretty much most of the U.S. trading session. So when you get that early weakness in the pre-market, and we have nothing to push the markets to retrace or revert back to like, if for instance, to the upside, it's nerve-wracking to see. You sit there all day and you wait, but that does change, and everything will change accordingly. So keep that in mind, guys. Remember, nothing is going to stay status quo. I mean, we've been in ranges for the last 10 to 12 weeks. We had a little bit of movement outside the range. Then prior to that, we were in a range for another 6 or 7 weeks. So, markets are setting up for a very big move, and I do believe that is coming. I do see some further weakness in the next several weeks. But then after that, if we do get some weakness, some chop, which that does happen during the summer months, I think it's going to be setting up for a decent rally going into the fourth quarter. But again, that's a little far out. We shall see. Let's talk about today. Well, bonds continue to sell off. This in front of you is the TBT. It's the inverse bond, so you would buy this to get short bonds, and you could see it's holding up really well, back above that 200-day moving average. I mean, a good buying opportunity would be to the 50 if that even does happen. I don't see that happening, but if we can get a little bit of a pullback, we could start legging into this trade yet again. But TBT I do like, so when bonds are selling off, eventually it's going to come into equities. It will flow back into equities. But at the moment, if bonds really sell off hard, it's also going to hurt U.S. equities as well. Take a look at the banks. Now, even though the banks are benefiting from a higher interest rate, look what's happening. This is what's really scary. We just cannot break out of this 25 area here. And this is not a good sign. So when banks are not moving, and especially when interest rates are rising, that's not a good sign. I do think they do play catch up, and I do see banks start to break out as well. The banks and financials did have a pretty decent move. So pay attention for the banks, because you might want to actually look for that for some weakness and buy into that banks, especially as you know when interest rates will be rising, so they will take advantage of that. But right now, that's not really a good sign. Let's take a look at the equity markets now. 2080 in the SPX is going to be a big number, and so you could say 208 here is going to be a really big number as well. That's going to be that holding with that support area where it needs to hold. And again, if that does break down, you're going to look for that 200-day moving average. You're going to see that flush. You see that little bit of a weak area here, thin zone right into these volume zones. This is going to be that next area, will be that 200, and then of course this lower end of this trend line, horizontal trend line area. So you can see all the momentum indicators rolling over. Not not oversold as of yet. We got to get down to that 30 area in RSI to really be oversold. So we really have some room to run here to the downside. So there's plenty of room. Now we're down 4 days, basically not straight down. We had a little bit of chop here and there. Friday we reverted back up. Monday we sold off a little bit again, and then Thursday we really didn't go anywhere. So, but you can see we've been making lower lows and lower highs. So we do have this bearish formation. We have this lower trendline support being breached. It did break and close. Now we'll see if it closes back above it. Then we might have a short-term retracement rally back to that 50. But we shall see. Today will be important. Today we'll get it. We're going to get. We had some weakness this morning, but we're starting to recover yet again. We were down about 60 Dow points in the pre-market session. Now we're only down 18. So it looks like the market wants to rally today. But again, I'm taking a neutral stance this morning. I just want to see how the market's opening, wait for that first 15 to 20 minute range opening, and then take it from there. That'll really give you a good indication of what trend's going to happen today. Diamonds, you can see, just really a sloppy mess. It's almost already at the 200-day moving average, so not a good thing. It is a follower out of the 5 that we follow, but here is the transports. You can see clearly, guys, this is do or die here. If this thing does break down, like I mentioned before, you're going to have fund managers, money managers take note, and this is going to really flush pretty hard down to this lower trend line area here and then here. So not a good looking chart at all. Very bearish. Lower lows, lower highs. This is a big concern to me. Banks not rallying, another big concern to me. Technology really took it on the chin the last couple of days, another big concern. So remember, like I've been mentioning for weeks now, stay put. If you're really looking to buy into any more of your longer term positions, wait. You're going to be able to buy these a little cheaper, okay? Lastly is the IWMs. Actually, we'll give you one more. It'll be the Qs after that. But see, the IWMs are holding up well, and that's what's kind of weird, because we have the other indices really taking it on the chin, and then you have the IWM, the Russell 2000, which is a good gauge of risk with the small cap companies, and it looks like that there is no fear. There really is no fear yet in the marketplace, and that's something that's interesting to see, that there is no fear. So that being said, let's see if the Russell can break down. If the Russell can break down and start following the other indices, then I think you got a market that's, as a whole, we're all following the same suit, right? We're all saying, okay, everything's bearish and we're going to start selling off again. That is something that's of interest to me. Banks weak, technology weak, right? Bonds selling off. But this thing here, when you see the Russell holding in right now, it's just a little weird, because I mentioned a few videos ago, the Russell is a precursor of what really is to come. Usually tops or bottoms several weeks before the other markets do. And right now, this is holding in true. So this is the only real bullish case I see in the other indices, okay? Lastly, you can see the Qs really took it on the chin, got really hurt pretty bad. Broke that 50. Next is going to be this uptrend line here. If it does take that out, guys, you're going to see this lower trend line, which by the time it gets down here, will probably match up nicely with that 200-day moving average. So 2080 in the SPX and this S&P cash is going to be a really big level. Let's watch that today for clues that we are headed lower. If we do revert back and rally, we take half that candle. That will be a good sign. Maybe we might have a short-term pause, but we shall see today. Watch the opening range, that first 15-minute, first 20-minute range. Really give you a good deciding factor of where we are headed for the trend for the day. Have a great day. We'll speak to you tomorrow. Take care.